Alright, good evening ladies. In today's video we're going to be discussing Rollbit and why it is potentially unbelievably undervalued. What I'm trying to do here on this YouTube channel is to try and create an archive of videos that I can refer back to in 2 years time and say, I told you so, and potentially Rollbit, this could be one of those videos. So we're going to go through the entire investment case for Rollbit, and it's actually quite simple when you look at the kind of metrics and numbers that Rollbit is pulling in. And if you don't know what Rollbit is, it's a casino and it offers, straight up casino gambling, roulette, stuff like that. It also has a perps exchange where you can do degenerate trading up to 2000x leverage on coins that you can't really trade anywhere else, like Unibot, for example. Here's the founder talking about the trade you could have put on Unibot a couple of days ago, where you have no slippage and you can use insane leverage and potentially make a huge profit on Rollbit. Now, obviously this is a casino, so I don't recommend using this platform, but people are using the platform and the house always wins. Well, the house on average wins, so I don't recommend you go ahead and use this platform. I'm not sponsored whatsoever. It is a casino, remember that. But we're going to go through the metrics and you can see how much they're printing, and that's kind of even more of a deterrent from actually using the platform. But as we can see, sometimes it might be a nice place to actually trade on leverage, because you can't really get 2000x leverage on these kind of random small cap shit coins anywhere else. So it could be a good spot to do this kind of degenerate leverage trading. And finally, the last product that it has is Sportsbook, so sports betting. And this is kind of a new segment for it, and it's growing rapidly and has huge potential as well. Alright, let's just start off nice and simple by comparing it to a standard casino, Web 2 casino, DraftKings. So a lot of this research is coming from Torchain Maximalist. I'll leave his Twitter handle in the description. So as you can see, showing DraftKings in comparisons to Rollbit. DraftKings has 6 times the revenue, and yeah, it has huge losses, but it is growing quite fast. So 6% monthly growth is insane. That's almost 100% yearly growth. And it has a market cap of 13 billion. Now that's market cap of its stock equity, so it's not the exact same as a coin, but you can kind of see where the valuation comes in. So just looking at this using a very simple price to sales ratio, we can see the price to sales ratio of DraftKings is just over 4 times, whereas the price to sales ratio of Rollbit is 1, so 4 times cheaper on a price to sales ratio metric. But to add to that, Rollbit is actually taking in a huge amount of profit, $50 million annually, so it has a PE ratio of just over 10 times, while it is growing at well over 100% annually, probably 200% annually, which is just absolutely insane growth. Now, that doesn't mean this growth is going to continue indefinitely, we can't know the future for certain, but if this trend did continue, they're growing at 200% annually at least, which is just absolutely bonkers, while DraftKings is growing at 60% annually. Also extremely fast growth, but they're making huge amounts of losses, in contrast to Rollbit, which is making $50 million in profits. And now let's talk about what they're doing with those profits. So a portion of the profits they make, so I think it's 10% for the casino, 20% for the perps exchange, and 30% for the sportsbook, goes to buying back the Rollbit token and sending it to the burn address. So effectively reducing the supply. So it's kind of like a buyback in the stock market. It's the exact same as a buyback in the stock market actually. So at the moment they're currently burning 1% of their supply per month, so 12% annually, so $5 million per month is getting burned from the profits that they're making. So that 10% of the casino revenue, 20% blah blah blah, that is being used to buy the Rollbit token and send it to the burn address. So Rollbit is one of the few crypto projects that's actually making cash flow, that's actually cash flow positive. What's another example of a cash flow positive project or company that uses its profits to burn the supply of its token? One of the best performers of the last bear market or the last bull market, BNB, Binance Coin, went absolutely insane in the last bull market and still in the top 5 of all cryptos worldwide. Here we can see the comparison of Rollbit's market cap to Binance market cap, as well as comparing the percentage of supply that Rollbit is burning in comparisons to Binance is burning. By the time the next bull market has hit, if Rollbit keeps burning at this sort of rate, they will have reduced the supply of the Rollbit token by 25%. This would add an additional boost of 33% to the price of the coin, all else being equal. So now we have to determine where we think potential market cap will be in 2 years' time for Rollbit, and then we can add 33% on top of that to account for the burning of the Rollbit token. Because if you invest in Rollbit right now, the token is actually deflationary, unlike pretty much every other token in the entire of CoinGecko, which are inflationary, meaning that VCs are waiting to dump on your ass, and they have like coins hidden away for the team members. They have coins here, they have coins there, and there's inflationary staking rewards, so the coin is inflating all the time, and there's more and more tokens to be dumped on your head. Whereas with Rollbit, it's the exact opposite. So right now it's making about $25 million a month in revenue, as you can see from here. 30-day casino revenue over 25 mil. So if you add up the casino revenue, the futures revenue, and the sportsbook revenue, and you annualize it, you're getting to about $500 million of annual revenue. And we just saw that their current market cap is just less than $500 million. So they're currently valued at a price to sales of less than 1, which is just obscenely undervalued for a company that is growing this fast. In the stock market, if you have a price to sales ratio of less than 1, that means you're like probably close to going bankrupt, or there's absolutely zero growth or zero prospects. There's very little hope for your company if your company is valued that low. Whereas here at Rollbit, it's growing at like 200% annually, and like for example Nvidia, which is growing 200% annually. Nvidia has a price to sales ratio currently of 43 times, as opposed to the 1 that Rollbit has. 43 times for Nvidia, a $1 trillion company. And Nvidia is growing at about 100% annually at the moment. So half the growth that Rollbit is currently experiencing, but 43 times the valuation. Anyway, let's use a different metric. Let's use price to earnings, because a lot of people like to use price to earnings to come up with a valuation for companies. So if you're using the current earnings of 50 million a year, so the margins that Rollbit are making are about 60%, so very high margins on their revenue. So if we take their earnings, multiply it by price to earnings of 15, which is standard for a casino in the public markets, we get a market cap of $5 billion. Already 10 times the current valuation of the Rollbit token. And that's using current earnings, not future earnings that it will grow into in the bull market. So right now it is undervalued by 15 times in comparisons to current stock market casinos. Now, the current stock market casinos also aren't growing at the kind of speed that Rollbit is. Like a valuation of a PE valuation of 30 times or even like 50 times probably could be used to value this company, because it's growing that fast, like potentially even 100 times price to earnings. But we don't even need to get so ahead of ourselves, even though there's plenty of fast growing stocks in the stock market that aren't growing as fast as Rollbit with price to earnings ratio in the hundreds. So right now it's growing its revenues at over 100% annually. So what will be its revenue in 2 years' time? It will be 4 times what it is right now if it keeps growing at 100% every year. Now, do I think it's going to be able to continue this extremely fast growth rate? Yes, easily, because we're going into a bull market. So I actually think the growth rate could accelerate into the bull market. But let's just keep it at 100% annually for the moment. So that will give us an annual revenue in the bull market of $2 billion. So let's slap a price to sales ratio of 10 on it, and you've already have a $20 billion valuation. It's a 40x in market cap. And then you have to factor in that 25% of the tokens will be burned, so that will increase the price by an extra 33%. Okay, so you might think a price to sales ratio of 10 is quite high. Let's use price to earnings. So $2 billion, 60% margins, that's $1.2 billion in earnings. You can slap whatever price to earnings ratio you want on this, but like I invested in the stock market for a long time, and fast growing companies usually command minimum of a 20x price to earnings ratio. If it's earning 1.2 billion, slap a 20x on that, that would be a market cap over $30 billion, $32 billion market cap. So that would be over a 60x from this price. So these are using fair valuations for Rollbit in the next bull market. And do I think Rollbit will have a fair valuation in the next bull market? Well, just like in the bear market, it is severely undervalued. I think in the bull market, it will become overvalued, just like everything in the bull market becomes overvalued. So just keep that in mind, that these, like, it could blow past even 10, 20, 30 billion dollars if it's making these kind of revenues and making these kind of earnings. So here's just a quick chart of the deposits into Rollbit, and you can just assume that every deposit that goes into Rollbit, the house always wins. The house is always going to take a percentage of that deposit. So as deposits continue to increase, revenue and earnings will continue to increase. Here are the deposits in various cryptocurrencies, and here's the deposits in just US dollar terms. So here's a table with some various earnings, some various revenue metrics, and some various multiples that it could get in the next bull market. And then on the right, we have the various prices it could be in the next bull market, depending on what valuation you want to give it, and depending on how much you believe it will be earning and how much revenue it will be making. Now, it does seem like this is obviously a pretty good potential investment case for Rollbit, but this investment case definitely doesn't come without any risks. This is a casino, so that means it could be hit by massive regulation. Now, they don't allow you to use Rollbit in the US at the moment. Maybe you can use it via a VPN or something. So that is definitely one drawback, and potentially they could get hunted down, but they're an anonymous team. That is also a potential drawback. It's potentially a good thing, but it's also a potential drawback. The anonymous team could rogue, or could steal funds or do some shady shit like FTX or something. So that is a risk. So regulation, an unknown team, but they don't seem like shady yet as far as we know, which is good. It would be quite hard to regulate them because they're not based in the US and they're not doxed. The other thing I don't like too much is already a very high market cap, or relatively high market cap of $500 million, meaning it has to get into, at least $10 billion to make the investment case into this worthwhile, because otherwise you could just invest in one of the high caps like Solana or something and take a lot less risk, but also get a similar amount of reward. Like if Rollbit was only to go 5x in the next bull market, it's probably not worth taking that risk. But if it does get to $10 billion, that's a 26x if you include the buyback and burn. So that is potentially a good risk to reward in comparisons to other cryptos. But yeah, just to summarize, a 26x if it got to $10 billion, a 50x if it got to $20 billion, and almost an 80x if it got to $30 billion. Now, could it go higher potentially? Could it not get this high at all? Obviously, potentially as well, if they don't manage their risk well, if people don't continue to use the platform, if they don't get new inflows of people coming in to use their platform, if they only have the same amount of people, eventually all those people are going to get burned and wrecked because they're gambling in a casino, and the casino is going to take money from you, and eventually you're going to run out. They constantly need to be adding more people, otherwise this whole flywheel, this growth comes to an end. But for me, the risk to reward makes sense as long as they can keep growing at these kind of crazy rates, which we can see from their deposits. It's not slowing down yet, but yeah, you need to keep an eye on these deposit metrics. I'll link the June dashboard if you want to check them out for yourself. But as long as they continue to grow the deposits at this rate, we could see like a doubling or quadrupling or even a 10x in revenues come the next bull market, and yeah, then the valuations can be absolutely crazy when that next bull market eventually comes. So I really hope you enjoyed the video. Thank you so much for watching. I really appreciate it, and we'll see you in the next one. Cheers.